past 3 years, I've been running an AI company. We first started serving local clients, and then we went to agencies, and now we've slowly gone up market really quickly. And in this video, I'm going to walk you through how I did it, how you can copy the same thing, and I'll walk you through real life examples of the industries that we're targeting that are the higher tier, and then also the drawbacks that come with it. A lot of people say the bigger the better, which is true, but there's always a caveat to it. Things that you don't quite prepare for that catches you off guard when you're targeting more enterprise clients, when you're targeting just more upper market, even mid-market companies. So we're going to walk you through all that. I'm going to walk you through how I did it, going from, serving $10,000 clients all the way to multi-million-dollar contracts with our AI company. So let's start with the industries that I have worked with. Under 30K is what I would deem lower clients or lower tier clients. These are more local businesses. We've worked a lot with agencies. For recruitment, I would say these guys are probably looking at 10K to 20K. Marketing agencies, these are probably 5K to 15K. Accounting firms, you're looking at 5 to maybe 10K per month. These can vary. Marketing agencies could have, maybe they're shooting an event. If that's the case, they might have sell a bigger package of 30K one time. That's happened before. For mid-sized industries, I would say I've worked with a lot of consulting firms. These guys are around 100K. So this is more niche consulting firms. This might be data collection consulting firms, or this might be consulting firms helping other companies enter markets that they're not quite accustomed to. So for example, we've worked with clients that helped restaurants enter the Middle Eastern market. So that's a very niche consulting firm offer. They're around 100K a year, and it can range all the way up to 500 actually. So this varies a lot. But with cybersecurity, you're looking at around 10K, a retainer usually for a full team deployment, and then also penetration tests, things like that could add up all the way to 70,000 for one-time packages for hospitals and things like that. And we've also done a lot of niche services for HR software. We've done employee training, a bunch of other niche companies that do very particular things, ranging from 30 to 200K packages. Here comes the big boys, the bigger market, the upper market, I would say, that we've worked with. That's 200K plus, going into the multi-million-dollar contract. Commercial real estate, for this one, you're probably looking at 200 to 300K for the whole leasing term. Biotechnology is one. This one, you're probably looking at, $1 million contract. If they're raising investment, this could be, $5 million contract raises for the first round. That is what it's looking like with the biotechnology. With wealth management, typically these guys charge for a percentage for the assets that they have under management. So let's say their client is a high net worth individual, $40 million assets that they're going to manage, they get 1% every year. So this could be 400K. Private equity, you're looking at 250 to $1 million checks if they're doing a majority stake or a minority stake in a plumbing business or whatever their thesis is. That is the range that I would say that we've seen. Enterprise software, you're probably looking at 200K. Shipping and logistics, this could be 100K per container. Let's say you get 3 to 5 containers. Export, import businesses, things like that. Shipping companies. For point of sale systems, this is something I don't see many people talk about. That's a really good industry that we found. These are companies that help other companies help with the point of sale part. So this could be, for example, helping companies allow multiple currencies or cryptocurrencies, or helping them optimize some point of sale technology, or adding more to their point of sale ecosystem. Things like that. You're probably looking at 200K plus for over the course of 3 years. So that is what we are seeing with the different industries. And of course, going up market is almost always going to be better, right? The clients you deal with are going to have less churn because they're more patient. They're used to the 6 month to 1 year contracts, and they're used to things taking time to mature. They have a great sales process, so you don't have to build their whole business for them. You might notice with some clients even you work with that you're pretty much building their whole business for them. You're helping them with offer creation, helping them with their whole acquisition pipeline, upsells, downsells. You're trying to squeeze everything for them, right? They can't even close the door. That turns out to be a problem that's no longer existent with the upper market that you do have to deal with, because they already have product market fit. They have a whole sales team that handles everything that you bring in. So that is a couple things that you're going to see. And one thing to keep in mind with a lot of these industries that I talk about, we sell the same thing. So we do cold email. That is the thing that we've sold for a front end offer for all of them. So this can be for any B2B use case, right? This could be investor, finding tenants, client acquisition. So it's the same product. So you keep that in mind. It's not a different product. It's the same product, but a different avatar. And typically you'll get much better results anyway with them, just because they're easier to fulfill. They have more case studies you can use. They have a proven offer. Maybe they're a big name in the industry, so there's already some reputation there. But with all that, there always comes, it's not as green as you think, right? The other side is not as green as you think, because there's a reason why not everybody can just suddenly go for the upper market. There's always caveats. There's always things you have to take care of, and there's always more nuance to it. So I'm going to walk you through a couple things that I did not see coming when I went up market, and that is licenses. The first thing, if you take commission on regulated industries like investment raising, healthcare, government contract, wealth management, financial services, anything that's where things are regulated, you're gonna need an SEC license in the United States if you want to take a commission, because you need to be deemed as a broker. Now that's where it gets tricky, because that's where you get all the upside, but you can't necessarily take upon it. So you just have to either get the license, or you can just charge more upfront. So you can just charge more of a retainer, a bigger retainer on the clients. That is typically what you have to do. But these licenses can get you off guard. And a lot of the time, companies can typically even agree to commission, and then when it comes to time for you to actually get your commission, you realize you can't get it, or they're like, well, are you licensed? And then it's like, well, I'm not. And they're like, well, I can't give it to you. And then you're like, well, you owe me commission. I'm taking a smaller upfront retainer, and then things get just muddied, right? So you have to be careful. And of course, with that comes governance. A lot of government regulations you have to deal with, legality. You have to be careful with every step you take when you work with them, because there can be legal troubles for the client. You don't want that on your hands, and that just means longer sales cycles and also cash flow. You might get a big chunk in 6 months, but in the meantime, you're not getting anything. That's typically how it will work, right? You're not getting small pieces like a retainer. With these big clients, typically what we've seen is it takes us around 3 to 5 sales calls to close, and we're spending around 3 hours. That's on the conservative side. This could be up to 5 hours. And you need to remember, when you're working with bigger clients, it's not just time you're spending, but there's also a lot of time you're spending when you're not on the sales calls. Right? You're making more assets. You're giving them more value up front. Making custom presentations. You're making custom proposals, and then that can all add up. Spending a lot of time and energy closing these people. Whereas the lower market is very, very easy. You have a deck that you've already pre-planned that is templated across all industries, and you might have a 30-minute discovery, and then you might have a 1-hour close call. That is very standard with what we do. We have a 30-minute discovery. We send them all the case studies, all our assets, nurture them, book a second call. That's when we close. That's how we set it up. So you have to keep this in mind when you're going up market. The second thing that I've noticed is free isn't always free when you're offering to these clients. And this is more on your side. When you want to acquire these bigger customers, you can't really offer the same things you do for the smaller customers, even if it's free, because attracting bigger clients with free costs them money in other ways, and I'll show you how that means. Because a free offer typically has implied costs. There's other costs that goes with it. There's time. There's effort on their end to make sure you get all the things properly set up, and there's opportunity costs for that bigger client when they're working with you, because they might not work with other companies. They might put their eggs in your basket, and there's also an association risk. They're putting their brand in your hand. They're putting their reputation in your hand. They're putting legal issues potentially in your hands, right? You might cause a legal issue that they have to deal with. So there's a lot of risk that comes with even a free offer when you're working with bigger clients. Typically, that's how it will work, right? Because with these bigger clients, these hidden costs often offset the cost of money that they just would have paid you. And let me explain how that works. So you might charge, let's say, $30,000 over the course of 6 months when you're working with these clients, and you might, let's say, have a 6% commission. Let's say you charge this, but let's say you're not going to charge it. It's a free offer. You're going to work for six or whatever, 1 month, 6 months. You're going to prove it to them. What that typically means is they have to devote these 4 factors to you for the engagement to be successful, even without paying you at all. We are doing cold email, so we are typically working with the business development team, and these guys are on salary. So they might be allocating 10% of their time towards, making sure you get all the documents, you get all the case studies, working the leads that you gave in the first place, closing them. There's a lot of time and energy that goes into that, right? So they might pay business development team $100K a month. That might be their whole business development team, all the employees' salaries, and let's say 10% of that, so $10K a month, their effort goes to you. Over the course of 6 months, that's already $60K. And the opportunity cost is a big one, because let's say they might miss out on $40K in opportunity costs throughout the 6 months when they're not working with other agencies, maybe agencies that are better than you, when they're devoting the time to work your leads instead of their leads, instead of working on the leads that they already have in their pipeline. So there's a lot of opportunity costs that can come with it, right? So that could be $40K. And association is the one that's just so hard to measure, because what if you do something that damages their reputation? What if you do something that when you say something that's not true, and then they get into a whole legal battle, right? Or what if you're just bad, or we're just bad at our job, and then that can damage their brand. So there's a lot of risk that comes with the association that these bigger clients tend to make with companies. There's the threshold on this. This will be millions of dollars all the way to maybe nothing. Maybe nothing happens, or maybe you're not that client facing for them. If that's the case, it could be, let's say, for ballpark $20K. super conservative. The bigger the company, the bigger that number gets. So over the course of 6 months, let's say it's 20K. So now we add all that up. That's 120K in implied costs that company has just paid you, that they would have just rather paid the 30K and not deal with this, right? Let's say you're a trusted company that they've already vetted. They would just rather pay you the 30 plus the 6% than dealing with the risk that you're unknown and letting you work for them or work with them for free. So you see where that actually makes a big impact. With smaller companies, typically free offers work really well because the cost of these 4 factors for a smaller company is less than what you would have charged them. If you charge them 30K, it might not cost them time and effort, right? Maybe it's just the founder or the CEO working the leads that you give them. Maybe they don't have a whole business team, or even they have a couple employees. The salaries are not as big. The teams are not as big. Opportunity cost is certainly not as big. And they don't have a big reputation. They're just starting out in the market, or maybe they're working local, so it doesn't really impact them too much. So all that can boil down for a smaller company. This could be 12K, right? The risk for over the course of 6 months. That is less than the 30K that they would have paid you. So they're willing to much more take that risk rather than paying you and finding out you suck and being in the net negative. They'll just pay the implied cost and take a negative 12K on their resources. So that is a bit of the maths that you have to be wary of when you're sending these emails or reaching out to these bigger companies. Free doesn't always mean it's an easy buy. Like, free is not a no-brainer offer for these bigger companies. You have to offer them trust. So maybe you're sending them, assets. You're doing the work and then sending it their way, and then they can be the judge of it. Or maybe you have a reference. You can say, hey, I've worked with this person that and you can vet me out. That's much more valuable than any free thing that you can offer them, because they much more rely on trust. So you need to be wary of this when you're building out your acquisition pipeline in order to get these bigger clients. That's something that I had to learn the hard way. Free, it ain't gonna cut it. They don't care about free, because 30K is chump change. Over the course of 6 months is nothing. The third thing you want to keep in mind is hierarchy. When you're working with a bigger company, you're not working with the CEO typically, or the founder. They're so far away from the layers of sales. They're much more strict, strategy. They're way up there, right? So you're typically working with a business development director, or the BD team. The business development team or the sales team, whatever the case may be. So that means you don't have as much flexibility with the offers, the lead magnets, the strategy. Now that can be a double-edged sword, right? That can be a good thing. They might have a proven offer. They might have a tested offer already, a tested angle. They might have a dialed-in sales process, so you don't have to do much. And then you just come in, pour the gasoline on the fire. So this can go either way. At the same, you don't want to really build out the whole business for a smaller company anyway, but that flexibility can be helpful. Because right now, let's say we have a client, a parking software, and their offer is, hey, you can make, for a church or for a business with an empty parking lot most times of the day, we can let people park in your parking lot and you get the money. There's 0%. We don't charge anything upfront. You just put up a QR code. You don't have to set up any equipment unless you want to. Just put up a QR code in your parking lot. We'll connect it to our software. We'll let people park in your parking lot. You pay 0 upfront, and you can get up to $3,000 to $5,000 a month in passive revenue. That's a pretty strong offer. They got the risk reversal nailed down. They've got free money pretty much, and it's extremely low effort. That is an example of something where we don't really need to change much, right? They've already got everything proven, tested. Okay, so strong offer. They could have a strong offer, and if that's the case, it's very, very easy for you. So, who wins? The 10K or the $1 million client? Or multi-million dollar? I would say, of course, the bigger client always wins, right? Bigger clients are objectively better. But the asterisk is the fact that you want to chase bigger deal sizes, not establishments, okay? That's one big component to it. This just means less bureaucracy for you and bigger contract sizes, bigger money for you. Have a look at this. You will notice that a lot of these companies, maybe other than enterprise software and shipping logistics, they can typically have employee counts that are 11 to 50. But they're selling packages that are 400K, $1 million contracts. Maybe they're a startup or they're a tech startup and they're raising money. So they're raising millions and millions of dollars. You want to target companies, if you look at this, that have a smaller employee count, but they serve contracts that are huge. That is what I would say, the lessons that I've learned going more up market, and the things that I would be watching out for if I were in your position, targeting much more of these industries, and being prepared for the 3 caveats. The licenses you have to deal with, the offer structure you have to plan out when you're acquiring these customers, and also the hierarchy. Be prepared to deal with the hierarchy. So all that jazz is going to be a big headache. Hopefully that I have saved you in your journey to going more up market. So hopefully guys, that has helped you, and I will see you guys in the next video.